Thanks so much for joining us here on the Market Day Report. I'm Marlon Bowling with you here on a Tuesday as we watch your grain and livestock trade. On the grain side, I want to bring in a little extra expert analysis. Let's go visit with Rich Nelson of Allendale Incorporated. He's based in McHenry, Illinois. He joins us by phone right now. And Rich, thank you so much for joining us. I wanted to walk through these major crop condition numbers from USDA yesterday in case anybody missed it. The corn came in with a rating of 68%, good to excellent yesterday. That compares to 65% the week before. The total last year was 75% there. Now, the cotton was 61%, nothing to compare it to from the previous week. That's the first report there. Rice actually picked up a couple of points at 66%, good to excellent. Winter wheat. This is kind of the story of the day, with the winter wheat going down 1 point from 50 last week to 49% this week. A year ago, that stood at 62. And spring wheat, the big story of all, 55% good to excellent nationwide. And a week ago, that was at 62%. So we dropped 7 percentage points just in 1 week's time. And if you zero in on some of the northern plains areas and the spring wheat production areas, boy, they are having some significant problems, especially when you get up in the Dakotas and Montana, aren't they?
They certainly are, and that's certainly reflected by today's price action. July spring wheat here, using that Minneapolis contract, actually with the 604 high today, highest price for the July contract since going back to June of last year for this particular July 2017 contract. So no doubt, looks like spring wheat is going to lead us the way. Corn secondary, and also actually interesting here today, this soybean contract also doing pretty well despite concerns about this soybean crop being revised higher out of Brazil.
Now, why do you think that would be? I mean, is it actually riding on the coattails of wheat of all things? Because most people think the wheat has been the lapdog here for a couple of years.
That's exactly right. And certainly with the wheat issue here, we do have concerns, obviously, about still the large world supply of wheat. One thing we can point out is some changing ideas of who's the problem situation. You know, we did have our U.S. was the problem here last year. Now we're going to see lower production out of the U.S. anyway, simply from lower yields, return to normal yields, and also lower acreage. But the issue actually is more of a hard red and soft red issue up on the spring wheat side, where we're kind of a unique product. Perhaps that's something that the trade is looking at as maybe a differentiation issue here.
We do have the crop reports coming out Friday of this week here. It's going to be coming out at 11 o'clock in the morning Central Time. So a lot of folks are already putting their best guesses out there. And I know you've been surveyed as well for your guesses to be thrown into the pot there. We'll have definite answers later on Friday. That'll be very, very interesting to see what USDA comes out with. Let's run through these, excuse me, these prices here, Rich, and walk through the corn and the rest of the grains here for everybody. Right now on the corn, we're still a nickel higher on July at 378. December now 4.5 higher at 396.5. So within a penny and a half of our high of the day still. On the soybean trade, right now you have July now 8 higher at 930, and November new crop 6 3/4 higher. Last trade there 934 3/4. Moving on to that wheat that we were talking about, in Chicago wheat we have July 8 higher at 437.5. On the Kansas City market, where harvest is going to be accelerating fast here this upcoming week, July KC wheat actually 8.5 higher at 438.5. It's interesting with the harvest underway. Now, looking at the Minneapolis wheat trade that Rich was mentioning, where they're having the weather problems, July Minneapolis wheat 12 higher at 601. We're still above that $6 threshold. And on the cotton market, we'll throw that in here, no extra charge. On July, we are down 31 points at 76 cents even, and December 2 higher at 72.63. We'll come back in a moment and talk with Rich Nelson, get his thoughts on our livestock trade too when we come back. So it looks like they're looking for higher cash cattle this week.
Yeah, I noticed already got bids eaten with last week's trade here, so a little surprise here. And what else we got going on here? One thing about the beef procurement issue, yesterday's box beef, the weekly report, showed some problems with procurement here for the extended stuff here.
Oh, yeah? Okay. So feel free to mention that there. It looks like lean hogs is really bouncing today, so we'll get to them in just a second here.
Sounds good.
All right. You might mention those bids too here, Rich. And we're back with you. We're talking with Rich Nelson of Allendale Incorporated, and I want to talk about this livestock industry here. Rich, I was just printing out the latest information off the wire regarding the cash cattle trade today, and for all intents and purposes, it looks like the trade is expecting a higher cash cattle trade yet again this week.
Certainly right here. We're actually already looking at bids out of Nebraska. Looks like 137 on a live basis, 216 on a dress basis. Both those prices are even with where basically we were at last week. So we're already bidding steady money, if not actually expecting some steady to higher cash trade. As a reminder, though box beef is moving higher, it's not from end users panicking and procuring product for extended delivery. In fact, that portion of the procurement is down about 27% versus last year in the latest week. What is important is that we are not getting the cash cattle supply that the trade was expecting here for the month of June.
Yeah, in fact, if we can take a look at the beef cutout value from yesterday afternoon, according to USDA, let's take a look at that. Big jump upward yesterday. This shows, well, it was 218 higher. I believe it was more like around $3 higher yesterday on choice cuts at the afternoon update there. So anyway, regardless, it's a big move higher. We're going to be getting a new update here in under 8 minutes from right now, Rich. How important is it that we continue to see higher wholesale trade in order to keep supporting this futures market like it is?
You know, this certainly is actually a pretty big deal, especially the fact is we've taken this cash cattle market down so hard in the previous weeks off of that 144, 145 cash market peak. And the cash beef, though, did not have that hit, simply because this market is not seeing those offered cattle numbers that they were expecting. We're only putting out 1 to 2% more beef than last year. Market was expecting 5-6% at this time of year. So definitely some surprising issues on supply end.
Okay, so what we have on the live cattle board right now, we can go back and visit that. We have the June contract up $1.65 at 133.75. And as I mentioned earlier, that's now in delivery mode. We have the August contract up 78 at 126.98. October is 75 higher right now. And if we look at the feeder cattle trade, well, on the feeder board, we are mixed. We have nearby August up 25 at 160.12 per hundredweight. September only up a nickel now at 159.40. And then the far out deferreds are narrowly mixed. If you look at the lean hog trade at the present time, big surges today. We have July lean hogs up $1.26 now at 81.68, and we have August up $1.26 as well. The pork carcass cutout values were actually down 22 cents yesterday afternoon, but the cash markets appear to be higher on the carcass values.
Exactly right here. As far as the hog end of things here, we are seeing still some good interest on the cash hog side. You know, we got the lean hog index, what futures watch for the cash hog measurement. That's at 78 right now. And we're going to see this market slowly appreciate until we hit that expiration on the 14th for the June contract. So on the hog end of things here, we have seen some interest from end users. That is certainly true. And the question right now is how long that will last, whether this seasonal increase in weights or in heat in the coming weeks turns off demand, or maybe we'll have a little cooler summer than normal and possibly hold this rally going here a little longer.
All right. Well, thank you, Rich. Appreciate it very much. Rich Nelson of Allendale Incorporated. He is based in McHenry, Illinois. And the hogs are trying to fly here today, Christina. So a big surge on the nearbys.
We'll keep watching. It's been an interesting day for all the commodities.
Very, very much, and led by the wheat of all things.
Okay. Thank you so much.
Haven't said that in a long time.
Haven't said that in a while.
Yeah.
Okay. We'll keep watching it. Marlon Bowl.